Good morning. Welcome back to Market Day Report as we open up the gates, let the horses run today, or at least we'll let something run today. You know, if today's market is anything like we've seen in the previous 2 weeks, we'll see a lot of volatility today. Obviously, we have an FOMC meeting, and so Jerome Powell set to tell us whether or not we'll see an increase in rates, a decrease, or will we stay the same? By the way, most economists believe, well, 99% weighing in that there'll be no change, but we'll know for sure later today. All right, what about the overnight trade? What did we see? Well, we saw a lower trade for corn as the corn market in the red overnight, down 2 1/4, 452 on the new crop. Soybeans were also lower in the overnight session, down 2 1/2. Wheat market started strong yesterday, finished in the red for Chicago, and it's lower overnight. Hard red was the only thing that finished higher in the session yesterday, but back in the red in the overnight session. And spring wheat also lower. Cotton market in the overnight session in the red as well. Let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. All right, Brian, plenty of things to kind of work into the conversation of the markets. What are you watching?
Hey, good morning, Tony. Well, one of the first things we always talk about is the weather, and it looks like there's a lot of rain, snow in the Nebraska, Omaha area. It's really going to miss out on some of the key areas of Oklahoma and southern Kansas, Texas, and wind is going to blow. So certainly that's a concern. The wheat market has rallied off of that news. You look at South American weather, it's raining in northern Brazil where they're planting that second safrinha corn crop. That's putting pressure against that old crop corn contract. But in southern Brazil, it's turning a little bit drier, and yields are being curtailed. Yield estimates for corn and for soybeans coming down probably from previous estimates. Now, we're still going to have a big crop, still going to have record type yields, maybe just not this biggest crop that we thought we were going to see because of that drought that's ongoing in southern Brazil. Corn and soybean markets, we're really not reacting to that. The soybeans trading sideways at best to lower, taking up the new lows for the week in the overnight trade. Probably going to see some follow through to the downside. Can we get much below $10 or even $9.95 where we find good support? We just don't have that much really to hang our hat on as far as strong fundamentals here. And then, another few days, we're going to start talking about quarterly stocks report. We're going to be talking about the planned intentions report. And by all our accounts, we're going to see well over 94 million acres seeded of corn, maybe close to 94.5, 95 million. We planted 94.6 million 2 years ago. I don't see any reason why we would plant less than that this year. I think we're probably going to push that even closer to 95 million. So that's, I think, what the trade's going to start focusing on is maybe less soybean acres in this report, more corn acres starting to be talked about in the trade.
Hey, Brian, you talk about that report coming at the end of the month, but we get another report at the end of the week. I know you've weighed in on that as well, so hang on. We'll come back in a moment. We'll pick up that conversation as Market Day Report continues in a moment. Well, we had a mixed day of trade yesterday in the livestock markets. And what's that report that's coming out we'll have all eyes on at the end of the week? Well, it comes out Friday after the close, 3 o'clock Eastern time, a cattle on feed report. We'll have some estimates for you in just a moment. All right, live cattle futures, and again, mixed trade yesterday, front month up 35 at 205.37. That June contract, even though it fell below $200, was in the red at $201 a hundredweight, down 7 cents, still well off of the day's lows. And then the deferreds in mixed territory. That's live cattle, feeder cattle. In the session yesterday, almost same story, front 2 months, higher with the deferreds May, August, September, all lower. And the hog market yesterday was lower across the board. as the July contract was trying to hold on to that $100 range but couldn't do it, gave it up and settled at 98.47. All right, we mentioned the cattle on feed report. Let's bring back in Brian Hoops, Midwest Market Solutions. Just looking at the estimates here, I know you've weighed in on that.
Right. Yeah, we're looking at the placement numbers being well below year-ago levels, close to 14 to 15% less than last year. We've been anticipating the second quarter of this year to really start to see those numbers of being tight and really start to show up. And I think this is the first look at it, that the placement number is going to be well below what we saw a year ago. Again, 14 to 15%, that's a significant number, and should be very supportive to the cattle market going into Friday. On feed numbers looking maybe close to 2% less than last year, so still have tight numbers and expected to be even tighter this summer. Still looking for that cash trade develop and still anticipating higher money once it does. The cutout values have been holding in here and starting to move higher. We gained last week maybe $6 in the choice, about $4.50 in the select. We've added to those gains so far this week. Hopefully at midday we're continuing to move higher. It's helping the packer margins a little bit, but when they pay that higher cash trade, it kind of offsets those higher cutouts, and their margins will still be in the red. Hogs may get some pressure this morning with the hog weights that were out earlier today. They're coming in a full 0.6 of a pound heavier than a week ago and almost 3 pounds heavier than a year ago. So those numbers burdensome and probably, as I said, put a little pressure against that hog market, but we're discount to the lean hog index. That's also going to act as a supportive feature this morning.
All right, we've thrown cash in there a couple of times, about a minute left on the gold market, hitting some new highs here as well. You have thoughts?
Yeah, I think we're going to continue to push higher in this market. I've heard some talk of maybe 3,500, and that's a long ways away, but it looks like the funds have pushed this market higher. Gold and silver starting to catch up. It wants to keep pushing higher, keep pushing higher, even though we're starting to see concerns about inflation starting to ease here in the United States. It seems like that gold market is what a lot of the fund traders want to be long in, as they have a bull market on their hands here.
Yeah, exactly. So we've got the precious metals market there, and then we have some volatility happening over in the energy markets as well. So that means one thing, Brian, we'll need to see you tomorrow and pick up the conversation. Brian Hoops is with Midwest Market Solutions.